The bull market continues to stampede the bears, and our data recently is showing investors are plowing into ETFs. Now, look, when money's being put to work, that is typically bullish. However, when you start to see extreme numbers of ETFs getting bought, it can be telling you that buying is unhealthy. So let's look at this cool post at MapSignals.com. And what do you know? Listen, we've been bullish all year, and the reason is because money continues to flow into stocks. This was our oversold signal. This is back in late October. We told everybody strap on the helmets, and it has been one beautiful ride higher. Now, if we look under the surface, because this is all about extreme buying in ETFs, let's first look at stocks. Well, we can see that there has been a lot of stocks getting bought lately. And look, last time we got overbought, we saw almost double the number of stocks. That's unhealthy, right? We flagged that back in early February, saying that this is definitely not going to last. Of course, the market did fall, but right now we're seeing more constructive signs of overall buying in stocks. And look, if there is buying in stocks, of course, there's likely going to be buyers of ETFs. And so that's what we're seeing right now. Last week, we saw 61 ETFs, mainly equity ETFs, right? REITs, energy stocks, you name it. They were all getting scooped up. And again, it's nothing compared to what we saw back in February when we had that big blow off top. So this begs the question, when you see a big spike of green, right? We haven't seen a ton of it over the past year because we've been in a bear market. I asked the question, when 60 or more ETFs get bought in a day, how does the market tend to perform going forward? Well, check out the returns right here. In this wonderful study, we have a few dozen instances of 60 plus ETFs bought in a day. This is going back to 2010. So we've caught a couple of bear markets in this, and obviously a big bull run as well. And here are the stats. After extreme buying, right, we can expect that the S&P falls 0.6% a week later, and it's down 0.4% a month later. And then if you look at the positive instances, they're still right around 50%. So it's a coin flip. So markets tend to struggle over the short term when you see this extreme level of buying, right? Who tends to buy ETFs? It's mom and pop. It's your brother, it's your sister, it's your cousin, right? Usually they may not be as informed as the big institutions. But don't get all bearish, because when you look out 6 months, the S&P is up 9% on average. A year later, it's up 17%. 2 years later, it's up 20%. So what is the bottom line? Bottom line is there is extreme buying that is going on. I'm not saying that, hey, we're about to crash or anything like that, but the latest run up, it should slow down based on history. But use that pullback to go buy great stocks. You know, the stocks that we talk about on this YouTube channel. And that, folks, is a great research report. So remember, none of this is personalized advice. Do your own research, like and subscribe to our YouTube channel. I will see you guys next time.